Welcome to the Travelex Weekly Outlook. The dollar softened to start the week of August 16th as generally discouraging U.S. data and also record low U.S. Treasury yields encouraged many investors to seek alternative safe havens such as the Japanese yen and the Swiss franc. The dollar, too, it also turned in an outstanding performance the week before, so that somewhat made it ripe for some profit taking. Speaking of last week, we did see the dollar really rally on concerns about the strength of the global economy, and what that did was trigger a rush into safe haven currencies like the U.S. currency and the Japanese yen. For the week, we saw the dollar rise by about 3% against a currency basket. That was its best outing in nearly 2 years. We did see the dollar fall back against the Japanese yen. In fact, the dollar slipped to its lowest in 15 years against the Japanese currency. That's another safe haven destination. Among the factors weighing on investor appetite for risk was the Fed's gloomier outlook for the global economy that came out last week. The Fed even acted to spur economic activity by opting to reinvest the money that it receives back from its mortgage-backed securities. It's going to now leave that money in the economy. What that should ultimately do is keep pressure or downward pressure on longer-term interest rates in the hopes of spurring bank lending. Last week, we also saw an onslaught of soft data from not only the U.S., but also Japan and China. And what that did, of course, was fan worries about the health of the global recovery. Consequently, we did see investors file out of those riskier assets and head towards higher ground in the greenback and yen. Concerns, though, about the global economy, that did help take the direct spotlight off of the dollar, which just a few weeks ago had fallen to its lowest level in several months against a basket of major currencies. At this point, it really remains to be seen whether or not the dollar is poised to once again benefit from poor U.S. data. On the one hand, that would tend to darken the outlook for the global economy and spur investors to seek safer ground in the dollar and the Japanese yen. But more longer term, I think that would only increase the odds of the Fed opting for quantitative easing measures, and that ultimately puts downward pressure on a currency. To gauge the latest pullback in risk appetite, investors this week will turn to data on the manufacturing sector, also on capital flows, the housing market, and also on wholesale inflation. Any type of positive data might help to revive the risk trade and put some pressure on the dollar and the Japanese yen. That's all we have for this week. Please check us out online for breaking foreign exchange news.